Perhaps you want to get along from within here and you want to trade against the internal, you can do that because that's our expectation. That ends up playing out, okay, and we get that bullish move to upside. So those people who are willing to take those longs, those early longs against the internal structure were rewarded, okay? There's other things you can add in, right? We get a strong liquidation of the Asia low with the fake break there, etc., etc. We get a sweep of this low here too. There's all these extra things, but the main thing is the framework. Now the internal structure has shifted bullish. So if we're just thinking about the simple framework, our expectation now is that this strong low will hold and we can follow the bullish internal all the way up towards the high there. Okay, so that was the move for London, to start to play it forward, okay, which potentially you could have capitalize on. Now, as we get into that gap between London and New York, we're waiting for New York to open. I'm not looking to take any positions, okay, letting the market do its thing. Now, on this day, there was high impact news at the start of New York, so I was not looking to trade. Let's let that high impact news play out because I'm not looking to stand in front of that train. Now, ends up happening that the news pushes price to the downside and the framework ends up failing, okay? The framework does not have 100% strike rate. You have to be aware of other factors, multi-time frame analysis, etc. But waiting for that high impact news to play out, you wouldn't be any losses there anyway. So we get it. Okay, now, thinking, again, only looking at this one time frame and following that repeatable framework, what would we now think? Well, our middle time frame, the M15 has shifted bearish. We've had an M15 boss, so what would we expect next? At some point, we'd expect the internal structure to shift bullish to facilitate that M15 swing pullback. Then we look for it to shift bearish, and then we would look for it to continue the trend.